Hi, welcome to Konexio Technical Insight. I am Rahul Randeria and I will be conducting today's show. Today we would be discussing regarding the trends, the setups, the technical indicators, the candlestick patterns, the derivatives data of Nifty, Bank Nifty, as well as the different asset classes. Now, just a general disclaimer, this video is just for an educational purpose. Consult your financial advisor before investing and trading. Now, friends, now let us discuss what we have mentioned in our last video. In our last video, we mentioned that the global markets were negative. Every pullback was sold off, and that was just because of the interest rate hikes and many downgrades in the global economy, and that is the reason why we have seen the selling pressure across the globe, and we were expecting that Indian markets might also trade under pressure, and we have recommended that any pullback should be used to go short at the higher levels, and those who are long should try to exit from those particular long positions and just try to go short if there is any kind of pullback at the higher levels. Ideal levels to go short in the markets in the Nifty was around between 19,500 to 19,600, and in Bank Nifty we have recommended to go short maybe around say 44,800, 44,900. Those were the area there one should go short. At these levels, still, the market has ended on the negative territory, but from these levels on the hourly charts or on the shorter time frame charts, the markets are into oversold territory. So we might see some sort of pullback or a bounce back from these levels. So friends, now let us go and check out the Nifty daily charts. We will see and we will try to identify how what could be the trend for the next week. So now let us check out the Nifty daily charts. Now this is the Nifty daily charts. You can clearly see this is the Nifty daily charts, and we have been discussing in since last couple of weeks. The markets were under pressure, and last week also market has remained under slightly under the grip of bears, and it has ended on a weak note. Now this is the daily charts. Now let us see what is the weekly charts. This is the weekly charts. Since last 4 weeks, Nifty has been moving into this particular downward falling channel, making lower tops, lower bottoms. And since last 4 weeks, market has ended on a negative territory. Currently, the Nifty has just entered a strong support area, which is around 19,250 odd mark. Until and unless Nifty doesn't breaks and closes below 19,250, we might see some sort of bounce back from these levels. This could be a dead cat bounce or just a counter rally uh, from these levels. So at this juncture, we might see some sort of pullback. So one needs to be cautious at this level, those who are short, because 19,250 could act as a strong support area, and we might see some sort of bounce back maybe towards the levels of 19,400 to 19,450 to 480 odd marks, or the upward resistance trend line. So as of now, Nifty on the chartical formation, it is on the midway. Still, it is in the downward falling channel, and if it breaks and closes below 19,250, then it might slip down to the levels of 19,000 mark. But as of now, before this, we might see some sort of pullback, and after a pullback, we might see selling pressure coming in at the higher levels, but that we will see later part. But as of now, some sort of pullback cannot be ruled out. So friends, now let us discuss the important supports and resistance level in Nifty for the next week. The first support in the Nifty is placed at 19,253. Below that, the second support is placed at 19,110, and third support is placed at 19,019. Whereas on the upside, the first resistance in the Nifty is placed at 19,436. Above that, the second resistance is placed at 19,557, and third resistance is around 19,645. These are the important supports and resistance level in Nifty for the next week. The primary trend remains to be bullish, but as of now, some sort of sideways consolidation or a pullback cannot be ruled out. And crucial level in Nifty is 19,250 on the lower side. If it breaks, then Nifty might drift down to the levels of 19,000 mark in the couple of trading sessions. So friends, now let us check out the derivative data. We will try to analyze the derivative data of Nifty calls. You will see on the screen in Nifty calls the action was seen in 19,400 calls, then 19,500 calls, 19,600 calls, and 19,700 calls. Now here you can see there has been a drop in the open interest. There has been a drop in the option premium. Implied volatility is very low. It is between 6.21 and 8.1. Low implied volatility means we might see a bounce back from these levels. But looking at the volume and open interest, because both are on the rise, uh, we can clearly see that the smart money is already into writing the out of the money calls. So friends, now basically looking at this data, drop in the open interest is showing that on immediate basis 19,400 could act as an immediate resistance. If it breaks, then Nifty might rally towards the level of 19,500 to 19,600. But uh, 19,400 could act as a crucial level. If it breaks and if it trades above those levels, then there are chances that another 200 points of rally cannot be ruled out above 19,400 mark. Why that is? Why we are expecting a rally? Because the implied volatility is lowest at this juncture. So we might see some sort of strength, and the smart money which have done strong out of the money call writing might start covering those the short positions in Nifty calls. So that might uh, uh, force Nifty to move into upward trajectory. So one needs to be cautious. Those who are short in the markets, if Nifty breaks 19,400, one should exit from the shorts and should play for long trade, at least towards the level of 19,500 to 19,600 odd marks. So friends, now let us check out the Nifty puts data. In Nifty puts, the action was seen in 19,200 puts, then 19,100, 19,000 puts, and 19,900 puts. Now here you can see there has been rise in the open interest, rise in the volumes. The implied volatility is between 11.10 to 11.85. There has been slightly buying seen in the Nifty puts. So maybe because the weekly close were negative, some traders might have bought Nifty puts. They might be expecting the Nifty might drift down to the towards the level of 90,000 mark, which this data is showing, because there is slightly positive in the Nifty option premium. I mean to say Nifty puts option premium from these levels. So on immediate basis, looking at to the volume and open interest data, we feel that 19,200 could act as an immediate support. If it breaks, then there are chances then Nifty might drift down towards the levels of 19,000 mark. So as of now, maybe again before that, 19,250 could act as a strong support also. So most probably, looking at this particular data, we feel that if there is a gap up opening, and if Nifty breaks 19,400, then we might see a sharp short covering in option in the call writers might come in for the short covering, which might push Nifty on the upside. And on the downside, 19,250 could act as a major support. If it breaks, then Nifty might drift down toward the levels of 19,000 mark. But looking at to the data and charts, what I feel that we might see at least a pullback rally or a bounce back rally from these levels towards the level of 19,500 to 19,600 mark for the next week. So friends, now let us check out the daily charts of Bank Nifty. Now let us see. what the charts of the Bank Nifty is indicating for the next week. Now, this is the Bank Nifty daily charts. You will see on the screen. This is the chart which we have been discussing regarding Bank Nifty since last couple of weeks. This is the downward falling channel which we have been mentioning since last couple of days also. Now, currently, Bank Nifty has been trading in a very narrow range in the last three trading sessions. You can clearly see. Now I'll show you the hourly chart of the Bank Nifty so that we will have a clear view that what could be the trend for the next week. Now this is the hourly charts. Now you can see on the hourly charts, Bank Nifty has been forming a triangular formation. Now on the upside, immediate basis, 44,000 could act as an immediate resistance, or to be precise, 43,957, the spot levels. If Bank Nifty breaks 43,957, then those who are short should try to exit from the short and should go long above those levels. Because once it breaks those levels, then there are chances that Bank Nifty might rally towards the level of 44,500, 44,600 levels from these levels, because Bank Nifty will witness a triangular breakout about 43,957 mark. So as of now, the setup is oversold. We might see a bounce back rally from these levels. So one needs to be cautious. Those who are short in Bank Nifty at these levels, if Bank Nifty breaks 43,957, then I suggest short traders should exit their short position and try to build long positions, or try to trade on the long side in Bank Nifty above 43,957 mark. So friends, now let us discuss the important supports and resistance level in Bank Nifty for the next week. The first support in the Bank Nifty is placed around 40,802. Sorry, the first support is placed around 43,672. Below that, the second support is placed at, you will see, 43,345, and third support is placed at 40,078. These are the crucial support in Bank Nifty for the next week. On the upside, the first resistance is placed around 44,071. Above that, the second resistance in Bank Nifty is placed around 44,571, and third resistance in Bank Nifty is placed around 44,980. These are the crucial supports and resistance level in Bank Nifty for the next week. Traders should try to just watch out these levels and trade in the direction of the trend. And we feel that we might see a bounce back rally or a counter rally or a pullback rally at least for the next week. So one needs to be cautious, those who are short in the markets. So friends, now let us discuss the derivative data of Bank Nifty. You will see on the screen the Bank Nifty data of Bank Nifty calls. In Bank Nifty calls, the action was seen in 44,000 calls. Above that, next concentration is around 44,500, and third concentration of volume and open interest is around 45,000. Now here you can see there has been a significant drop in option premium. Next, the implied volatility is between 9 to 10.81, and there has been a rise in the open interest, there has been a rise in the volumes, and there has been a significant drop in option premium, which is clearly indicating that smart money is already into writing the out of the money calls. But as I said, the charts are showing some kind of different pictures. Implied volatility is between 9 and 10.81. Now on immediate basis, 44,000 could act as an immediate resistance. If Bank Nifty breaks 44,000, then there are chances that Bank Nifty might rally towards a level of 44,500 to 44,800 odd marks in the next week. So, as I said, chartically, 43,957 is the crucial level. If it breaks those levels, then Bank Nifty might rally sharply towards the levels of 45,000 or 44,500 to 45,000 odd mark, because the traders, those who are short in Bank Nifty out of the money calls, might go for short covering their short positions above 43,947 odd mark level. So friends, now let us discuss what we have observed in Bank Nifty puts. In Bank Nifty puts, you will see on the screen the action was seen in uh, 43,800 puts, then 43,500 puts, then 43,000 puts. Now here you can see there has been a rise in the open interest, rise in the volumes. Implied volatility is slightly high. It is between 12.53 and 13.71, and option premium is neutral. So we might see some sort of Bank Nifty or writing in the Bank Nifty puts once Bank Nifty crosses the level of 43,957 mark, because here the change in the option premium is very flat, but the position of the charts is showing that once Bank Nifty crosses those levels, then smart money might start writing out of the money Bank Nifty puts or at the money Bank Nifty puts. So one needs to be cautious, those who are short in the markets, and watch out for that particular level, which is 43,957 in Bank Nifty. If it breaks, then we might see a sharp short covering rally in Bank Nifty uh, of at least maybe 700 to 800 points in the next week. So friends, overall, looking at the charts and derivative data of Nifty and Bank Nifty, the view is that we might see a counter rally or a dead cat bounce in the markets, at least for the next week, because since last 4 weeks, the markets are under pressure, has closed on the negative territory, and the setup is quietly oversold. So we might see a bounce back rally in the markets for next week, and one needs to be cautious. Those who are short should try to book profits, and any pullback or any pullback or a intraday correction should be used as a buying opportunity for a pullback rally or a bounce back rally for the next week. So friends, now let us come to the final segment of our show, which is positional call. Now I have identify one stock, the heavyweight stock, which is in the news at least for the next week, or specifically for on 21st August, which is Reliance Industry. The stock is on the verge of a triangular breakout. You will see on the screen. Now this is the stock. Reliance Industry has been moving in a triangular formation. The stock is on the verge of this triangular breakout. You can see the volume was on the high on Friday, and again that is important that Geo Finance is listing on Monday. So the derivative data is also has indicated that there is strong writing in Reliance calls. So we might see a short covering bounce in this Reliance, the calls which have seen strong writing in at the money calls as well as the out of the money calls. So this might push Reliance Industry stock on the upside. And again, the stock is on the verge of a triangular breakout. The breakout is again supporting with rising volumes. So we might see stock rallying at least in short to medium term. The stock has closed around 2,556. Traders can buy the stock, or short-term investors can buy the stock in the range of uh, 2,556, and on corrections to 2,530. Maybe on Monday we might see a gap up opening. Even if there is a gap up opening, one should buy 50%, and after that, if there is a cool up again, one should accumulate at the lower levels for an upside target of 2,770 in short to medium term. Short to medium term maybe could be 4 to 6 weeks, uh, maybe in next 1.5 months. But at least on the Monday, the stock could be in the limelight because of Geo financial listing and triangular breakout. We might see a sharp short covering in the stock, which might put uh, the Reliance stock on the upside, and which will again, Reliance being a heavyweight, it will again pull the index on the upside. So those who are short in the markets should try to book profits, should try to go long in the markets, and short to medium term or momentum traders should try to look out for Reliance stock for an upside target of 2,770 in next 4 to 6 weeks. Thank you very much, friends, for watching the show. Any suggestion you can give in the comment box, and have a nice trading week. Thank you.